there, welcome once again to the Dukascopy TV studio. I'm Ben Jones. Back in the studio alongside me to discuss alternative investments is partner at DynaCapital, Simon Aeschbacher. Simon, once again, thank you very much for joining us.
Well, thanks Ben for the opportunity to be here again.
Not a problem.
It's always a pleasure.
So we're discussing today, obviously, DynaCapital. Can you recap again where your current position is? Do you focus on bonds or equities, and can you explain why?
Well, we're basically a family office plus and sort of managing money for clients long term. And on one hand, on the other hand, we also have a leg where we do manage our own alternative funds, basically hedge funds, and small ones for the characteristics of the diversification, and because it's the part of what we have been doing all along, and which is our expertise basically in equities and long short and futures trading.
Okay, now you've outlined that within alternative investments you focus on hedge funds. Can you explain why it's this particular sector of alternative investments that you focus on, and is now the right time, is now a good time to focus on these?
Well, I think generally it's always a good time because to come back on what we think on the markets and on first of all on the investment landscape, it is complicated right now. 0% interest rates, a lot longer than people thought, have its impact on valuations on equities. Bonds really do not look interesting in terms of asset class, especially sovereign bonds. But even spreads on the lesser quality bonds have narrowed dramatically. So basically you're stuck with being along something that you think is too high, and which is the equity class. So it makes a lot of sense to diversify a bit and try to have alternative investments and/or hedge funds with typically the characteristics of also generating alpha. Particular alpha in markets doing nothing, try to make some money for clients and/or protect you on the downside. So in that sense, we like, obviously in the hedge funds, but we like people who have this capability. And I think you find these people in the macro space, you find them in the long-short equity area, and you find CTAs in the CTAs area. Now the CTAs is also maybe the most tricky because everybody knows its diversifying effect on the portfolio. Everybody knows that the last good year for CTAs has been 2008 as an asset class. So everybody is convinced by it, but the disappointment of the performance for the last 5 years is pretty huge. So is it the time right now? I think it's always the time. The question is, how much. The question is, how much do you put in terms of your asset allocation?
Okay. Now, finally, can you discuss some of the challenges that you personally face when focusing on hedge funds?
Well, I think it's exactly as it was outlined before. I mean, it's really to it's not really a challenge. It's try to find the people who are able. I mean, there are two convictions basically that I have in terms of investment in not only in the alternative space and investment overall in the asset allocation. One is we all looking of trying to get to the low of the interest rate cycle. So in terms of managers, I would look in the macro space and in the CTA space, try to figure out which manager has the capability to make money in a rising interest rate environment. That is one of the characteristics I'm really looking for. The other point is that, and trend we have seen the last couple of years with the bull market in equities is the volatilities generally have gone down. And we all know it's going to change one day. The question is when. And again, in that sense, it makes a lot of sense to have try to find managers who have proven capabilities to make money when volatility picks up.
Simon, once again, thank you very much for joining us.
Well, thanks, Ben, for the opportunity. Thanks a lot.
And thank you for watching. Do make sure you keep clicking back to Dukascopy TV, as we'll be bringing you plenty more updates and exclusive interviews. Bye for now.